Hey, so you're thinking about moving to North Idaho and you are wondering what is the deal with Assumable VA loans. Maybe you've never heard that in your life and you're curious now that I've said it. So today's video, we're going to talk about Assumable VA loans for buying a home. I brought in the lovely and talented Eric Boardman here. He is a veteran. If you're still in the military, are you still a veteran or is it only when you get out? We're going to answer that question. Stick around to the very end. Here we go. Hey, if this is your first time to the channel, be sure to hit that subscribe button and tap the notifications bell so you can stay up to date on all of our latest content. Our team, we get calls, texts, and emails literally every single day from people just like you trying to learn more about North Idaho. So if that's on your radar, shoot us an email, text, call, whatever. Let's get that conversation started so we can help you guys make a smooth move right here in North Idaho.
All right, here's what's cool about our group. We confer often. Whenever we have team meetings, we are unapologetic about the fact that a lot of the people that are in our group that we talk to all the time are former, current, retired, first responders, or military. In the same conversations, the biggest hiccup for people even looking at selling their home and moving up here is interest rates. We can't do anything about that. That's the Fed, but that is the first most common thing that comes up. And I get it. Even if I'm thinking about moving, interest rates are prohibitive. I want to discuss VA loan options and benefits for some of those that have those entitlements out there and advise of a program that we actually just did where we were able to get some veterans into a home at 2.25% under an assumable VA loan. Some of you guys out there, if you're in like a fleet concentration area like San Diego or Camp Lejeune or big areas that have a lot of military, it's a little bit more common, but it's a little bit less known out here. Oftentimes they're not even listed as an option when you're looking at a home to buy.
Can I jump in real quick? Because they are probably, and you might have a number on this, maybe not, but extremely common up here because North Idaho, the Panhandle, which is the top little part, has over 22,000 veterans in it. So you can assume that there's a lot of VA loans being used out up here in the Panhandle. And this is like a market that is very just beginning to get tapped into. And it's super important information if you're using a VA loan or if you're moving here and you can perhaps assume somebody else's VA loan without even being a veteran. We're going to talk about that in a minute because that's kind of interesting too.
Yeah, it's funny you brought that up. We reached out to some folks that were able to pull some data, and this is all preliminary. And we're not by any means experts in this. We're just kind of ground level. This is what we've used to help some of our clients out. And reached out to some partners out here. I found 205 homes that are under VA loans that were loaned on within the last 2 to 6 years. 2 to 6 years are important, obviously, because our interest rates were sub 4%. So not all of those are for sale, of course, but I'd also really want to know that if I was a seller, because think of how marketable that makes your house. And I don't know about you guys, but if I get a chance to bone the banks, I'm going to. All right, sorry, any bankers that are watching, but why should they make all that extra money? I'm going to give you some examples of houses that have VA loan assumable portions, and you'll see how much money is saved with the interest rates if you're able to assume it. The way it works is just like a car note. If I have a car for $70,000, I can no longer afford the payments, and I've been paying on it for 5 years, and the balance is, say, $60,000. I can go to Seth and he can assume that note and just take over the remainder of that balance. VA loans, you can do that. You can do it with some other government loans, like some FHA loans too, but we're not going to talk about that as much. It's most common with VA. The important thing to remember is you need to get approval through the VA, and then you need to get approval through your lender. Where it ends up kind of cool from both perspectives, if you're listing a house, you can get pre-approval through your lender to have an assumable VA for whatever that principal amount is. I know this is a lot of jargon. I'm just going to give you numbers because that's what makes sense to me. I'm going to give you the first one, the one that we just sold. The address was 6020 Airhorn, and the amount was $589,000. In this instance, you go through the fine print, you find that it was VA loan assumable. There was a balance on that VA loan for $363,000. Like a lot of people thinking about moving, they own their home wherever they are. So a lot of times it's contingent based on the sale of that home. The buyers in this case were able to bring the difference. So the 363 to the 589, which would be the, is that 226?
Good math, bro. I got nothing on that.
That's right.
Let me get a calculator.
So 226,000, they were able to bring that piece. That's a big portion of this. you have to be able to cover the difference between the principal and then the purchase price. They were able to do that, went through the VA loan process and just assumed that loan with 27 years left at $363,000 at 2.25%. I'm going to give you the difference because, like I said, this is what really resonates with me, because there's one part of every purchase agreement that I hate reading, and that's the amount of interest you're going to pay by the end your loan is over. So in this one, $363,000 at 2.25%, your monthly mortgage is roughly $1,500. The payoff date will be 2051, and your total interest paid through the life of the loan will be $121,687. You take that same $363,000 at 7.5% at a 30-year loan. You don't pay it off till 2054. Your monthly mortgage is $2,542. It's over $1,000 difference,
Dude,
just in your mortgage, and it's purely interest.
wow.
Your total interest payment is $550,733. So it's more than quadruple what it would be if you're able to jump into that.
That is insane.
It's wild. It gets crazier as the house prices go up, obviously.
So can I pause you real quick? Can
Yes,
we talk about entitlement?
Yes.
And what that is in relation to the VA loans.
Cool. Entitlement is just whether or not you're entitled for that VA loan. If you're active duty, you had to do 90 days straight. That's a big portion of it. If reserves, it's a little bit funky. Go to va.gov and you can determine whether or not you're eligible for that VA. What we're talking about is if you get a VA loan and you get that 30-year fixed VA loan, your entitlement is tied to that house. With the VA loan assumable, if another vet or somebody with VA entitlement assumes it, you keep yours. There is an option for a lot of our first responders and those folks listening that don't have a VA entitlement. There are some loans that you can assume where the seller is willing to forego their VA entitlement through the life of that loan, where they already have property purchased, or they're going to build, or they have enough money saved up, or through the purchase of that home, they're just going to pay cash. So if there's 26 years left, you can buy that under the VA loan assumable under their entitlement and still take over that particular loan. It just depends on the transaction and the two people that are involved.
We're going to talk about it in the case study today, where both partners, both family members have VA entitlement. So they're willing to forego the entitlement of one of them because the other one can still qualify for a loan. So a situation like that could work. There are situations where someone can come in and assume that loan that is not VA, which is pretty cool. That's probably not common information. I had never heard of that until we started to deal with this.
Right. And that's just it. Like, this is ground level. We learned this from running transactions and going down a wormhole on the Google and reading all sorts of stuff. And honestly, I reached out to agents that were in like Norfolk, Virginia, where there's a huge fleet concentration. Yeah, I deal with like 8 or 9 of these years. Give me your rundown on what this looks like. So once you start to get familiar with it, it's not a hard process. Important thing, if you're a seller out there and you're looking to list a home with a really favorable interest rate, get pre-approved from your lender to do a VA loan assumable. It's not a whole bunch of extra paperwork. Just think about how much more marketable your house is. It's pretty cool. I want to go over this one real quick. There's 103 Bellevue Drive in Sagal, Idaho. It's listed at $825,000. It has an assumable portion, an assumable loan on it at $480,000. So obviously, if you could make up the difference, here we go. $345,000 would be the difference. If you bring that to the table, the $480,000 at 2.25%, your monthly mortgage would be $2,258. You paid off in 2050. Total interest paid is just under $155,000. The same $480,000 at 7.5%, your mortgage is $3,581. So it's another $1,400 a month in mortgage just in interest. Your payoff date wouldn't be until 2054, and your total interest would be $728,000.
Wow.
So if you've run into the right one, and I'm telling you right now from dealing with sellers, man, they like it because they're like, yeah, I know I have this sweet interest rate. I'd rather pass that on to another vet or somebody else, right? I guarantee first responders to be on that list. I'd love to be able to pass it off as long as they don't need the entitlement. Here's the big one. So we look at these houses. I would call these this is in a price point that's pretty common. Both these are right in that $500,000 to $800,000 price range. It's not just for those. You have some luxury residences that match that as well. So even those, there's potential to save a lot of monies there. This is our listing. It's 12474 West Rockford Bay Road. Purchase price on it right now is $2,599,000. Believe it or not, this one was a VA loan as well. As he said, both members are veterans currently. So the assumable amount on this house is $1,227,000. is where it gets wild. And there's 25 years left on the loan. If you, at 2.25%, your monthly would be $5,825. Your payoff date would be 2049, and your total interest is just over $500,000. You take that same loan at 7.5% on a 30-year, so it wouldn't be paid off till 2054. Over $9,000 a month for the mortgage, just under $1.9 million in interest. So obviously, if you're dealing with a significantly higher principal, those interest rates are going to go up like crazy. But that's stuff that's just not common knowledge. I mean, you've been doing this a lot longer than me. When we were talking about VA loan assumables, just not a lot out there, right?
Nope.
But then you go through the process. I think there's some common misconceptions I want to get out there. The one with Airhorn was our first to kind of run with that. They were able to get their house when it all started, get their house listed, get it sold, get approval through the VA, get approved through the lender, and purchase that house in less than 90 days.
That's awesome.
There are some things that can hang that up, right? Like it's a contingent offer, like a lot of you are looking at. You've got all this equity in your home. You're going to use that to buy your new one. So there are some things, depending on how long it takes to sell, that's still less than 90 days. It's not this big, crazy monster to go through all that. And if it means that we're getting you a house where you're paying half of your mortgage, we'll do extra paper.
Yes.
I don't mind waiting. To me, that's a huge win. I get a huge kick out of that. And again, we kind of stick it to the banks. Is okay with me. So those are some of the things we really wanted to bring up. Again, if you are a seller out there in our local area, we don't want to lose good people, good vets in our local area. But if you're looking to sell, just go through the process of getting it pre-approved through the VA and through your lender. Again, I think it makes it considerably more marketable. You have a better chance of another vet jumping into your house or somebody else eligible. And let your agents know whether or not you want to intend to keep that entitlement. Again, imagine how much more marketable it is if somebody that's not a vet can come in and assume that. If it doesn't matter to you and you already have your plot picked out. As always, guys, we have a ton of respect and love our group, right? I guess Seth likes to call it our tribe. A lot of first responders and a lot of vets, which is awesome. A lot of times family members are real estate agents, neighbors are, good friends, family. I totally get that. You guys don't have to use us. But if you have questions about any of this, reach out and hit us up. We'd rather have you getting the best deal that you possibly can and using a benefit that you've rightfully earned to the best of its ability. And I'm sure there are some other folks out there that know this, again, in like those fleet concentration areas. But one of the perks about being up here, we get a lot of retired first responders and a lot of retired vets because it's awesome. So there are those opportunities here. Make sure your agent's in the know and that you're paying attention to some of that fine print. The only option is not always to pay 7.5% on an interest rate.
Thank you, brother. Thanks for doing the legwork on that. Yeah. And thank you, guys. Hope that information was useful. We'll catch you on the next one. If you're still in the military, are you still a veteran, or is it only when you get out?
That's a great question. Actually, I can't even answer that question. I know I still get discounts at like Lowe's and Home Depot. That's what's really important to me. So you classify me however you want.
Important.
I still am in the service.